The economic fallout from Russian President Vladimir Putin's decision to invade Ukraine will hit citizens in the wallet as prices and borrowing costs rise, curtailing growth and creating an uncertain future. The United States and its European allies this week announced what they called the toughest sanctions yet against Russia after Putin chose to recognize parts of eastern Ukraine claimed by Moscow-backed separatists as independent nations and then launched an unprovoked military campaign against the country. The United States, Britain, and the European Union targeted top Russian banks and state-owned corporations, sovereign debt, and critical technology, crimping the nation's ability to raise cheap funding and import high-tech goods, essential for defense-related industries. It also slapped sanctions on top officials and executives, including Putin. In this video we will discuss the damage that these economic sanctions have inflicted onto the Russian nation. These developments also pushed investors to dump their Russian stock and bonds, triggering the biggest one-day stock market decline in the nation's history and sending the ruble to a record low. As U.S. President Joe Biden warned that Putin was turning his country into a pariah state, international organizations canceled major sporting events scheduled to be held in Russia this year, a possible sign of the economic isolation that lays ahead. Foreign companies could pull out of Russia amid greater country risk, further hurting the economy's competitiveness and modernization, economists said. British oil giant BP has now announced under greater pressure to exit its 20% stake in the Russian state oil giant, Rosneft. The sanctions largely target state-owned banks and enterprises that Putin has relied on over the years to enhance his power and strengthen the armed forces. Nonetheless, Russians' living standards will inevitably be collateral damage as the targeted sanctions take effect. The International Institute of Finance said in a statement on February 24 that, the bottom line is that these sanctions will have a significant impact on Russia's overall economy, and average Russians will feel the cost. The measures announced by the White House included cutting off Russia's two largest banks, Sberbank and VTB, from the U.S. financial system, as well as a few others among the top 10, dealing a blow to trade and investment needed for economic growth. The White House also banned U.S. investors from purchasing Russian sovereign debt on the secondary market, a move that will drive up the country's borrowing costs, ultimately feeding into higher rates for consumers and businesses. In an attempt to prevent Russia from getting around the debt ban, Washington also imposed restrictions on the ability of U.S. investors to fund 13 leading Russian banks, energy, and industrial companies, most of which are state-owned. Europe has reduced Russia's ability to tap its financial markets. The sanctions imposed by the United States and Europe went beyond financial flows and included sweeping restrictions on Russia's access to its cutting-edge technology, such as microprocessors, for use in the defense, aerospace, and maritime sectors. After years of stagnation that have led to falling living standards, Russia's economy had been primed for a second year of strong expansion as the price of oil, its main export, surged on a rebound in global growth. After Russia attacked Ukraine, that outlook is now unclear. Underscoring the potential economic difficulties ahead, Putin held a meeting the following day with the nation's largest business lobby, something he hadn't done in quite a while. This is a sign of fear and desperation in Kremlin. Capital is expected to flee Russia faster as risks grow, putting further pressure on the ruble and adding to inflation, pinching the pocket of the average citizen. The Russian central bank has more than $600 billion in foreign exchange and gold reserves that it can use to protect the currency and support the banking system. However, those reserves have been rendered useless as the United States has hit the bank with sanctions, a move that froze its dollar holdings. Russia has been scrambling to prevent financial meltdown since the United States, European Union and other Western allies imposed sanctions on much of the country's banking system, including freezing hundreds of billions of dollars worth of reserves Moscow had been stockpiling for years to shield the economy. Analysts estimate that more than half of Russia's reserves of foreign currency and gold are now off limits. The ruble fell to a record low on March 8, tumbling just shy of 127 to the dollar, increasing the cost of imported goods like food, clothing, and computers. The Russian currency has lost more than 40% of its value since the start of the military buildup and could fall further if the war escalates or sanctions mount. Russia's central bank has announced rate hikes to 20% in order to save the currency. Moscow's bruised stock exchange, which was expected to open for trading on the 28th of February, didn't open. It's closed since the crisis began. And Russians were pictured at ATMs trying to withdraw foreign currency. In short, we would say that Western sanctions appear to have had an immediate and noticeable effect on Russia's economy. And there could be more to come. The EU is banning the sale of all aircraft, spare parts, and equipment to Russian airlines, and the EU, UK, and Canada have banned Russian aircraft from their airspace. Russia, in return, has barred some international flights. Now USA has also targeted the most important artery of the Russian economy. They have banned the purchase of Russian oil and gas. If other NATO allies follow the suit, then Russian economy will be devastated. The Kremlin has already stated that sanctions could prevent Moscow's ability to pay its obligations. This move will be the last nail in the coffin of the Russian economy. Let's see how the future is for the Russian economy. As of now, it looks shady. I hope you enjoyed this video on the Russian economy. Do leave a like if you found this video to be interesting. Comment down your suggestions and subscribe to stay updated. Till then, goodbye.